Hello and welcome. This is Brandon Wendell with you, and I'm going to go over some analysis on the commodity markets for this week, starting off here on Sunday, the 24th of October, 2021. I've got crude oil called up right now, and I decided to bring up a weekly chart, and I'm looking at the continuous chart as well. Oh, sorry, just going to pull that out of the way real quick. Something I was looking at for something other project. But looking back in time, the reason why I'm bringing this up is you can see that we haven't been this high in a little while. And going back to 2018, what I notice is we're running into the origin of some selling pressure here. And I believe it was also a supply zone going a little bit further back. Yes, it sure is there. 25th, I'm sorry, what is this? 2015. So going back in time, we're running into weekly supply, and that could cause prices to start to move to the downside. We've experienced a very strong move up in crude oil. And like I said, it may be coming to an end because we do have this big selling pressure that came out of these areas back in 2015. And what was the next one here? You can see that was actually a test of it in 2018. So if we look for the untested portion there, it's about 87.30 to 91.38. Got to be a little bit careful because we're using the old prices. Let's see if I use the unadjusted contracts here. Continuous contract, they're back adjusting the prices, so it should be using the old contract's prices, not the current contract. Okay, but there's really not much you can do with this because you got to use old contracts because this contract didn't exist back then. So we're not quite at the highs that we had experienced back here in 2018, but we're extremely close. The other thing that's very troublesome when you look at the weekly chart is the indicator I'm using down below is the relative strength index, the RSI, set at 14 periods with overbought at 60 and oversold at 40. Now, the reason why I use this, I'm looking at prices are making new highs. But what is not making new highs is the indicator, and that's measuring momentum. When you make new highs in price, you should also be making new highs in your indicator and momentum. If you're not, that's what we call negative divergence. That's usually where prices turn down. So this is a warning sign that we may be getting into a correction when it comes to crude oil. So I'm going to go back to the contract specific now, and that's CL for December. So looking at the current contract, here we are. Again, you still see the divergence on the weekly. We'll drop this down to a daily chart, get a little more detail. So we've definitely had a lot of moves to the upside. Actually, I want to go back to that weekly for just a moment. And the reason why is I want to use these Fibonacci extensions and measure our preceding impulses. Kind of had a couple of these here. Yep, rally, pullback, and the impulse back up. You can see we hit a Fibonacci extension there. Then we had another impulse and correction, starting from this area, up, there's your correction, and it looks as though we're not quite at the target yet. So we were looking at that supply zone going all the way back to 2015, and that's right around the 88.73. So while we are still seeing some weakness, we haven't confirmed anything yet because we haven't actually put in a top. We could end up going a little higher after a pause. But our target is probably going to be 88.73 before next big retracement, kind of like what we've seen here. Going down to the daily time frame, you can see that we're getting a little bit of weakness popping in every now and then. There's actually a few more red candles than we've seen before, but they're not connected. There's not a whole bunch of red. So it looks as though we still have lots of buying pressure. We're just flattening out a little. So the trajectory is losing steam. The move is losing momentum. That's all that's happening. But overall, still very, very bullish. So you don't want to fight that trend. You want to trade in the direction of the dominant trend. I can also, it's very difficult to really see good impulses here, but I can try to confirm and see if there's correlation between impulse, direction on the daily. No, not so much. It's much better on the weekly or the last impulse, correction. And you can see we're stalling in those areas, but that's also suggesting some more movement to the upside as possible. So look for more buying opportunities and bullishness in crude oil. We'll go down to the 4-hour time frame. You can see that we've just had a correction. That's what this was. And this was more of a running correction where we pretty much just went sideways rather than pulling back. Most of the time when you see something correcting, you expect it to do this. Run to the upside, correction down, continue up, correction down, and then continued up. This time we did a move up, and a correction was pretty much sideways. Slightly lower highs, then we made the higher high. So it looks as though we're getting ready to break out. We just made some new highs here, and we should be able to continue upwards for a bit. Let's see, if we did this, fib extensions, we don't have any kind of correlation. You see we're flatlining right at the 100%, so our next target would be 84, 83 for another little pause. That's all it's telling me is the pausing points. But that means that we're going to look for buying opportunities and let our winners run as long as possible, at least up to the 89 area. Oh, you can see it right now on the 60-minute chart. Impulse, correction, impulse, correction, impulse right now, waiting for another correction back. You can almost do an LA wave count here. We've had a lot of 5-wave moves. And again, that's where Fibonacci's come into play. We only installed a fib level here, so that wasn't really helpful at all. And not always is. Really what I need to focus on is the trend here. And you can see on the trend, we had in the past some rallies that came off these lows on the correction. But notice what's happening. There's a low, another low, and another low. But we're getting strength, and here's why. On this low, we were well below 40, which means when we moved up, we were not going to take out prior highs. And sure enough, we didn't. We pulled back. Now, when we pulled back, the RSI was not below 40. It was actually at 40.10. So the fact that we pulled back, but the RSI could not get below 40, look what happened. We broke the prior highs. And guess what? Right there, we pulled back nowhere near 40 on the RSI. So, of course, we were easily able to make some new highs. There you go. So now we're getting a little bit of a pullback once again. And the other thing we can also measure to see if the trend is getting stronger or weaker is the Fibonacci retracement. I go from the beginning of the candles that started the upward move to the end of the move. So instead of going from the low to the high, I go from the opening of the move or opening of that trend. And this one was a pretty deep retracement, I believe. I mean, you just see it. This should be 76.4. Should be 23.6. There we go. That's better. And we'll get the ratios out there as well. I guess I can put them on the right-hand side. No, let's leave it red. That's fine. So, as you can see, on our first impulse up right here on this trend, we retraced 76.4% before we rallied. That's a really deep retracement. The next retracement wasn't as strong, I believe. Nope, look at that. We retraced 61.8%. So that's suggesting that the deepest we should retrace right now is 50%. Because if you see, we've been going from one retracement to the next level to the next level. So if we're strengthening in trend, which is what it looks like we're doing right now, that would suggest that our pullback that we should have right now should not go below 83.45. So what I should be doing is when I go to a smaller time frame, I happen to be on the 60-minute, I can go down to a smaller time frame and look for demand zones above that area, because that's the deepest we should be retracing right now. We couldn't even retrace much more than 23.6 already. So we'll delete that for now, go down to our smaller time frame and see if we can figure out where to buy. And boy, do we have a great opportunity right here. Look at this, rally, base, 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 and rally. Now we may have already missed one right here. We'll have to see if it comes back, as it may. Let's take a look. Like I said, we got rally, base, 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 rally right there. A little higher, there it is. Let me get this out of the way so you can see the numbers. Unfortunately, this one was already tested. Let's see, what's the high here? I want to make sure it's right. 83.88. The close on this was 83.89, so it did close above. So this was a zone. Rally, actually, no, it wasn't quite a zone. So I'm just realizing it doesn't quite meet the criteria. This is our zone right now that I'll be looking for. If we're retracing down, I'm looking for it to come down to the 83.63, 83.46 for a nice little bounce. There's a couple of other zones just below that just as well. And it's here, kind of overlapping, and this one overlapping as well. So it's going to be very difficult for prices to get below that area. As you saw, it was a 50% retracement of the preceding impulse. So I think that's going to be pretty much our target, and look for prices to turn around that area. If they do turn around that area, what we're going to have is a nice big move upwards from these lows to the high we can measure the pullback. And that, I said, should get back down to 83.63. So the opportunity this week for crude oil would be to buy this 83.63, stop below 83.46 with the first target 84.67 and your second target 85.31. So that's what I'm looking at on crude oil for a possibility. We can move over to Nat Gas and take a look there. And with Nat Gas, I'm going to go to, first of all, clean my chart. Secondly, we're going to start off with a bigger picture. So I'll go out to a daily chart. And it appears on this daily chart, at first glance, I might be seeing a head and shoulders formation forming where we are on the right shoulder currently. Interesting. Let's take a look at the weekly to see what's going on with the trend there. But notice we've got a left shoulder, head, and we're forming a right shoulder right now, which is likely to stall out. Well, it's not really a great supply zone here, but could end up getting a little bit of reversal on this right shoulder around 5.757 of 611. And maybe we go just to the body, I don't know. But we'll see. We'll fine tune this by breaking it down. I'm going to take a look at that weekly chart. And the weekly chart is it's showing some weakness, but not much. You can see we did have higher highs on the indicator, so not necessarily telling us we're turning around, but that topping tails, those topping tails are selling pressure. That's a lot of weakness coming in right now on Nat Gas. Not a very bullish sign. So let's take this down to a smaller time frame. We'll go down to the 4-hour. And now on the 4-hour time frame, let's see what we've got. We've got a little bit of selling pressure we're coming into as we just opened up and gapped up into this level of a drop-based drop. We're above 60 right now on the RSI, so that's not going to hold. I think we're going to be able to continue a bit higher here. What I'd really look for narrowing this down would be, well, it's already been tested, but you had rally, base, and drop. Not the best of zones because you pulled back before you broke to fresh lows. So, unfortunately, in the 4-hour, I don't really have a great entry point. I'm just going to kind of hold off on that and wait and see if that the head and shoulders formation ends up falling through. I just don't have anywhere that's great as far as an entry point. Maybe 5892, 6.111. We can take this down to a 60-minute time frame and see if anything changes there in that picture. Yeah, definitely does. We have, I'll just delete this for now, start a fresh one. A strong downward pressure is right here. Rally, base, 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 drop, and that does take us to some fresh lows. So that's probably a little bit better and smaller as well for the zone. So you're looking at 5.866, 5.940. What I want to see, because the RSI is going to be very high, lots of momentum. When you hit that area, what we'll need is some sort of negative divergence as we're coming into the zone to trigger an entry. But I look for an entry for a short, and it looks as though we're kind of building a little bit of demand down here that we left. This would be target number 1. And of course, if we're playing this as a head and shoulders formation, we could possibly hold on long term until the measured move going all the way back to the daily chart. And that daily chart measured move and target would be, I draw the neckline first, right? You're looking at the height of the head extended downwards from the break point, wherever that break point ends up being. There it is, the height of the head. I can just duplicate that. And depending on where we break, well, we do have some possible demand that we'd look at here at about 4.0, but it could take us all the way down to some of this demand, a little bit lower. We can just keep an eye out. I don't think it's going to make it all the way down to 3.4 without pausing first. It looks as though we might have something here first. Around the 4.0 or 4.2. That's what I would target. Ultimately, initially, again, you've got selling opportunity 5.866, 5.940, target number 1, 5.439, and then ultimately drop it down all the way to that next target, which is about the 4.2 area. In the meantime, since we're very, very bullish, we just had this huge gap up. I don't know if there's any opportunity if we were to go to a 5-minute chart. Don't think so. We're not going to see anything right here. Be able to get in. Yeah, nothing there. So just be patient, pick your battles. You know, you don't want to chase this and buy in right now. It's way too high. But we're likely to keep moving up until we hit that supply on that 15-minute time frame. So that's what I got on Nat Gas. Since I got it here, we can take a look at heating oil, another commodity, and I'm going to go ahead and change my chart for a moment. I want to get rid of those moving averages. I was using those as a trailing stop for a day trade. No big deal. And we're going to take this out to the daily time frame, clean up the chart. And there we go. We'll go to the hard right edge. And looking at this, it looks as though we're losing momentum. Prices on heating oil are pushing up, but the momentum is heading the wrong direction. See, that's pushing down. So we have a negative divergence going on now, which could continue us to the downside quite a bit. Nearest demand that we have, honestly, could be the origin of this big rally around 215. Not sure if that's going to be it, but I'm not seeing anything else as a really good demand zone nearby. So right here, you can see the price is definitely consolidating. So we're getting ready for a pretty big breakout. And because we're consolidating right here, it may just break to the upside. We almost can draw a symmetrical triangle. We may even see it on a smaller time frame better. So let's take a look at that. 240. Yeah, on the 4 hour, you see that consolidation. Typically, when you consolidate, you continue in the same direction you entered the consolidation. Honestly, you've got to consider almost all this consolidation, and we may end up breaking upwards first, but we did lose that momentum. So you could take a break almost in either direction. I don't take the breakout trade. Usually when we break out, I'll wait for a retest of the pattern before I take a trade. So I need to close on this 4 hour time frame outside of this consolidation and then retesting the line as your shorting opportunity with the stop on the opposite side of the formation. So that's what I'll be waiting for. You can see we're in consolidation because we have almost no trend. All right, we're hovering right around 50. It's just going sideways in price. That means there's no trend and we've got consolidation. So I'll probably see it even more on the 60-minute time frame. Obviously, I can adjust this a little bit. Oh, so delete it. Anyway, the consolidation areas can be adjusted just slightly here. You see, we're just continuing to see more weakness in price. Won't move. There we go. Oh, I need to go back further to find the bottom there, but anyway, this is the consolidation in the triangle. And that's actually a trend line. So, you know, it's a confirmed trend line because it's got 3 touches, not like the upper line. The upper line's only a guide and a little marking of the consolidation. It's only got 2 touches. So when you get 3 tests, oh wait, I'm sorry, I forgot this was here. Cannot use that. Can't cut through candles when you're drawing trend lines, things like that. Should not do that. So this is actually only consolidation being marked off as well because there's only 2 touches there just as well. All right, so nearby, as far as our breakout, we do have overhead supply, rally-based drop, but this is a very weak supply zone. You can see we couldn't get above 60, couldn't get below 40 as we came out of it, and couldn't make a new low. So really, the only play we've got on heating oil will be waiting for the breakout of consolidation. That's all I got, and it's not great. So I want to wait for it to break out, retest, and then trade the continuation. So if we go to the 4 hour chart to get an idea of which way it should break, as I mentioned, we were moving up. So I put a little more emphasis on a breakout to the upside than a break to the downside. I'd be more suspicious of that. So that's what I've got in the energy markets for this week, and we'll get some updates later this week.